Welcome back. As we've shown you, one of the big movers today in the U.S. market is Snap, the company behind the Snapchat messaging app, down almost 34% on its most recent results and forward-looking forecasts. The company has referred to what it calls a challenging operating environment. For a deeper dive into what's going on, let's bring in Mark Shmulik. He's senior analyst covering U.S. internet stocks at Bernstein. Mark, thanks a lot for joining us. There will be a lot of investor interest in this story. Of course, you've written a report on this this morning, and it's titled A History of Violence. And what you're referring to when you use the word violence is the extreme volatility that we see in the stock. We're seeing it today with the stock down 34%, but you also make the point that we saw it in the most recent quarter, where across the period of that quarter, the stock came close to doubling in value, if not doubling and more. And I think you referenced that type of volatility as being quote unquote violence as well. Put this all in context for us. Are investors getting it right today by selling this stock off so much?
Yeah, first, thanks for having me. And the answer is yes. Yes, they are. This is a history with this company where expectations tend to kind of rise into earnings intra-quarter, and then there's disappointment. Expectations get a bit ahead of ourselves. I think this is something like 7 out of the last 8 quarters where we've had a kind of a very violent move, usually in the downward direction, but mostly after kind of running intra-quarter. This stock right now sitting here at $11, $12, it's back to where it was in November. So it's not, as dramatic a pullback as it looks like, but certainly speaks to the level of expectations investors have. If investors want to take away any good news from this print, it's that there's kind of this perpetual optimism of investors that maybe this is the quarter where they get it right. I think what we learned kind of listening to the earnings call last night is this wasn't quite that quarter where they got it right.
Revenue was more than $1 billion. It was close to $1.4 billion. What is the company doing correctly?
Yeah, look, they went through a really, tough year on all fronts. They had a bloated cost base. Engagement growth was kind of just trickling along. Revenue growth was certainly kind of hampered and potentially impaired as rates went up and advertisers pulled back from some more discretionary platforms. And the revenue print wasn't much to speak of. If you strip out their Snapchat Plus revenues, which by the way were fantastic. They've got 7 million paying subscribers for Snapchat Plus. Ad revenue growth was up 2%, and the guidance suggests it's going to grow mid-single digits. You compare that to Facebook or Meta, guiding to growth in the mid-20s, and you could certainly see the gap. But they're rebuilding their ad product. They're kind of starting from scratch. They're just making some progress, around the e-commerce ad product side. They're really just getting started on app installs, and that's always been Snap's bread and butter. So, they're really like in inning one of rebuilding that product. If you want to take away some good news, their SMB advertising base grew 20%. First you get them, then you prove it works, and then they start scaling their spend. This isn't going to get solved tomorrow, but perhaps there's some seeds that over the next 12 months, we might start to see some real progress on the ad product front.
Explain that phrase to us. SMB, is it?
Oh, sorry. Yeah, small to medium businesses.
Right,
if you think
okay.
about the lifeblood of Facebook, they've got around 10 to 11 million active advertisers. It's those small businesses, that drive Facebook or Meta forward. And, Snap's making a concentrated push to go after those same advertisers.
You also say we like the strategy of focusing engagement efforts of pushing more content from outside users' personal networks. Explain that strategy to us and why you like it.
Yeah, look, Meta's laid out the blueprint for what to do here. 18, 24 months ago, we were debating whether TikTok, was going to go kill Facebook. And what did they do? Well, they launched Reels over there at Meta. And then they started to surface more content from outside of your family and friends. If anybody, has spent some time on either Facebook or Instagram, you see a lot more content coming in from creators and things that Meta's decided they think you might like. And it's really driven a massive growth in time spent on the platform. Snapchat's now realized that they need to do the same thing. User growth in North America was actually down kind of sequentially. So they've got to figure out how to get more spotlight content into your feed, more creators, these Snap stars creating content that they're going to push to you. So they're copying, I guess, this playbook that Meta's pretty much executed on the last 18 months. and if they can be successful at it, there's certainly proof that it works.
Who are Snap's users? Those of us who don't use it think of it as an app used by teenagers who don't want their parents to see their messages.
Yeah, look, that's mostly true. I think at least in Western markets, we've more or less settled into our, core, call it social home, kids, and I'll use kids loosely, but, they do very well in the segment up to, 24 to 34-year-olds. It kind of taps out around then, very high penetration in that younger demo, 90% of folks up to 24, 75% penetration up to 34. Then you age out and you go to Instagram, and then you age out and you go to Facebook Blue. But they've got a core loyal user base. They called out that they've got 800 million, monthly global users. That's not a small number, but what you really need to do is get them to spend more time and figure out a way to bring those advertisers in to make some real money off this platform.
So you've got a price of $12 per share. Let's remind ourselves where we are today and how do you arrive at that target of $12 per share? There we are at basically 12. Yeah. We're at 11.48 right now.
Yeah, we're right at it. So, my recommendation to investors, especially given the violence is, you called out at the top of the call, it's probably not to step in here. I think they need to prove to investors that they can be, a durable growth company. And at the moment, we just haven't seen it. There's some seeds, but given the volatile moves in the stock, I don't think it's the right time for investors to step in. Though we do think that around $12 is fair value. We place a multi-year revenue multiple on it. We do believe that the revenue potential is there, particularly in the outer years. We just need to see it to underwrite it with a bit more degree of confidence.